There's only a short time left. Save yourself and get rich. When the US government tells you the economy might be headed for a recession, when the Federal Reserve blames the downturn on tariffs, when the stock market prophet Warren Buffett warns that tariffs will vaporize the value of the US dollar, when the giants of Bridgewater Capital say the monetary system is collapsing, when the global bond king tells you that US treasuries are about to be dumped on a massive scale, when George Soros's hedge fund group tells you that America is being shorted, meaning when individuals powerful enough to snap their fingers and shatter global markets, all speak with one voice, telling you that America is accelerating toward collapse. And when US stocks, US bonds, and the US dollar all plummet at the same time, is this it? Is America really about to game over? In the coming month, we must be ready for the worst case scenario, an American collapse, bankruptcy, and the dollar, stocks, and treasuries turning to worthless paper. But is this really going to happen? Prosperity magic welcomes you. We've heard all of this before, most recently during the 2008 financial crisis. Back then, even American banks collapsed. The stock market crashed, real estate prices plunged, and the wealth of millions evaporated overnight. But here's the question. Has America collapsed yet? Gone bankrupt yet? Have U.S. stocks, bonds, and the dollar truly become worthless? You'll realize something. The national treasury of almost every country in the world holds only two things: gold and foreign reserves. That means whenever a country makes money, they either use it to buy gold or buy foreign currencies to store in their national treasury. Why? Think about it. If Japan wants to buy oil from the Middle East, if Germany wants to buy high-end chips from Taiwan, if Brazil wants to pay off its debt, do you think anyone will accept yen, euros, or reais, the currencies you print yourself? Number, they only accept two things: gold and US dollars. You want to trade with me? You want to pay off a debt to me? I'll only take gold or dollars. That's why over 80% of global trade is settled in US dollars. Without dollars, you can't even buy oil or food. Take India, for example. In 2023, lacking enough US dollars, they couldn't afford to import oil, and domestic fuel prices skyrocketed. Or take the 1997 Asian financial crisis. The Thai baht and Korean won plunged in value as the entire world rushed to sell off these currencies. In simple terms, the world no longer believed your currency could buy anything. It believed your money was about to be. Why? Simple. Because everyone knows the Fed can print money. Today, the U.S. brings tons of dollars to Japan, buys up all the goods Japanese workers have painstakingly produced, and leaves behind nothing but paper printed by the U.S. Sure, Japan can use those dollars to buy from other countries. But if the Fed just keeps printing and printing every year with no limit, the value of the dollar will decline. For example, in the last 20 years, the U.S. dollar has lost 40% of its purchasing power. If I do nothing and just hold on to my dollars, then my purchasing power has already declined by 40%. Since cash doesn't earn interest, if I don't use that money to buy U.S. government bonds, it's no different than having my wealth stolen invisibly. Take China as an example. People say that China earns trillions of U.S. dollars from America every year. When this money flows back into China, if China doesn't find a way to send those dollars back out, the yuan, renminbi, will appreciate dramatically and uncontrollably. Here's how it works. Suppose a factory in China earns $1 billion today. Can they use that $1 billion directly inside China? No, they can't. They are required to exchange that $1 billion into yuan before it can be spent domestically. In other words, when China earns trillions of US dollars each year, those dollars are sold to buy yuan, causing the yuan to appreciate. But when the yuan strengthens, Chinese export goods become more expensive. What used to cost $100, say a pair of shoes, might now require $150. That shoe loses its price advantage and might not sell anymore. When products don't sell, factories shut down, millions lose their jobs, and the economy collapses. That's why many countries always remember the harsh lesson Japan once taught the world. Back then, Japan sold a massive amount of home appliances and cars to the US and earned a fortune in dollars. So American capitalists laid out a trap specifically for Japan. They forced Japan to sign what's known as the Plaza Accord, which compelled the yen to appreciate. The exchange rate shifted from $1 equals 240 yen to $1 equals 120 yen. In simple terms, the yen doubled in value. As a result, Japanese export prices also doubled. And the outcome? Brands like Toyota and Sony couldn't sell their products anymore. Factories began moving to China, and Japan's economy entered a lost decade that actually lasted 30 years. So if a country primarily earns money by exporting goods and its currency appreciates, then its products become expensive and harder to sell. Factories go bankrupt, the economy collapses, and American buyers shift to purchasing from other countries like China. You must remember this principle. When a country earns a lot of dollars, if those dollars aren't sent back out, the local currency appreciates and exports are harmed. That's why when countries earn dollars from all over the world, they usually use them to buy U.S. Treasury bonds or gold and store them. Then, when the time is right, they can sell that gold or those bonds to get dollars for spending. That's also why foreign reserves aren't made up of just U.S. dollars and cash. They are mainly U.S. government bonds. Why U.S. bonds specifically? Take Brazil's central bank as an example. They might offer 12% interest on their bonds, while U.S. Treasury bonds, so there's a 10% interest rate gap, right? Yet the world still rushes to buy U.S. bonds. Why? Because even though you lose 10% in interest, if Brazil's currency crashes, it could devalue by 20 to 30%. At that point, even if you earn 10% in interest, you still lose at least 20 to 30% due to devaluation. And that's just the loss on paper. If Brazil's currency truly collapses and you're a country holding large amounts of it, you won't even be able to sell it off. So if you don't buy U.S. Treasury bonds, are you really going to trust bonds from the UK, Germany, or Japan to be more stable than American ones? That's why, even though many say the U.S. is on the verge of collapse, will America actually go bankrupt? The truth is, it can't. For example, if Ukraine borrows several trillion U.S. dollars today and cannot repay it, the country can go bankrupt. Its stocks, currency, and bonds can all become worthless because Ukraine cannot print U.S. dollars. But the money the U.S. borrows is in U.S. dollars, the very reserve currency held globally, nearly $10 trillion worth. But the U.S. dollar is printed every year by the Federal Reserve, the central bank of the United States. So how can the U.S. possibly go bankrupt? That's why Americans openly say that their defense spending is essentially paid for by the rest of the world, not by themselves. Because the whole world lends money to the U.S., and all America has to do is print dollars to pay it back. That is the essence of dollar hegemony. Some people say that times have changed, implying that the U.S. wants to rise again from the ashes to trigger a global financial crisis and then become the first nation to recover, pushing the rest of the world into recession while America once again stands on top. Put simply, they want to blow up their own economic house so they can rebuild it into something even stronger. Many people don't believe this idea. They think we won't need the dollar in the future. We could use the euro or the yuan. That is, the U.S. will no longer be able to strangle the world like it did before. And I agree that right now the whole world is talking about de-dollarization, and the dollar hegemony can no longer rob global wealth as blatantly as it used to. But let me ask just one question. The world has purchased $10 trillion worth of U.S. Treasury bonds. How much foreign capital has flowed into European or Chinese bonds? That is to say, if today there were $10 trillion of international capital ready to lend to China and Europe, if the world were willing to hold yuan and euros, then the economies of China and Europe would take off immediately and dollar hegemony would collapse completely. The US's aggressive plan for economic rebirth that I mentioned in my previous video would utterly fail. But for now, I don't see the world stockpiling euros or yuan. Even when they're selling off US bonds, what they're hoarding instead is gold. And the country with the largest gold reserves in the world is still the United States. So why are the major financial powers, even the Federal Reserve and the US government, still working so hard to support the United States? Because they want the entire world to collapse, not the US. They want a global financial crisis, not a deep recession in America. They want to use financial mechanisms to control the world, not just rely on tariffs to make money. This time, the financial plunder is closer to ordinary people than ever before. If you simply work hard and do nothing else, then you're basically working for free for someone else. The money you earn will end up in the hands of the capitalists. Those currently trapped in old stocks will lose everything. If you don't want to be a victim in this game, and even hope to level up and surpass your current status, then follow my channel because I will continue to share more insights with you. And if you're afraid that you'll forget everything you've just heard, then liking this video will help. It will be saved to your playlist. Many say the US government's tariff war against the world ultimately failed because the tariffs only lasted 90 days, like some kind of turtle releasey stunt. But if you understand what I'm saying, then you'll realize that this round of tariffs is actually a modern version of the Plaza Accord. What's the goal? To show the world the consequences of disobedience. What does that mean? Just look at the US dollar index. It has dropped 10% since the beginning of the year. People say that global capital is fleeing the US. Everyone is selling dollars, so the dollar is losing value, and that America is taking heavy losses. But is that really true? As I've already said in my previous video, the dollar's depreciation is actually a good thing for America. Simply put, this year the US has to repay trillions in treasury bonds. If the dollar falls in value, doesn't that mean the real repayment amount also drops? At the same time, this triggers a global stock and bond crisis. Capitalists who sold their stocks earlier and held on to cash will now have the perfect opportunity to scoop up assets at bargain prices. Meanwhile, the Federal Reserve can now justifiably inject liquidity into the market to rescue it. You can verify all this yourself. I won't say more. But the point is, in this tariff war, what we're seeing is that aside from the yuan and the Vietnamese dong losing value against the US dollar, most other currencies in the world have actually gained value against it. So what does that mean? Let's say you're a Japanese trader selling goods to the US and you earn $1 million. You'll have to pay a 30% tariff, which means you're left with only $700,000. When you convert that into Japanese yen, maybe before you could get 10 million yen. But if the yen is strengthening, now you might only get 8 million yen. In other words, when you, a Japanese business person, trade with me, an American, I've already taken a slice of your profits through tariffs. And with the yen's appreciation, you're losing even more. To put it simply, tariffs plus currency appreciation drive up your cost of doing business. In the end, you'll be forced to raise the prices of your exports to the US. At the core of the Plaza Accord and the tariff policy, what are they really about? It's not just to make your currency appreciate, it's to make the goods you sell to the US become more expensive so that no one buys them. Eventually, your goods pile up domestically, your businesses go bankrupt, people lose their jobs, your economy collapses, and you lose 30 years of progress. That's why, even with just a few short days of tariff imposition, Trump already said it, the whole world is lining up to kiss his behind. Because everyone remembers Japan 30 years ago. The image hanging on this fortress wall reminds the world of Japan back then. and in that, they see their current selves. Now, the U.S. pays less debt to the world, while goods sold to the U.S. become more expensive, quickly lose competitiveness, and may lead other nations to become the next Japan. So what can you do? The only choice is to let your currency depreciate. And there are only two ways to do that. First, sell your own currency, then use that money to buy foreign exchange reserves, namely US dollars and US Treasury bonds. That's why we're seeing US Treasury bonds stop falling and even slightly recover. It's because countries around the world don't want their currencies to continue appreciating, so they are forced to buy US bonds. This is America's hostage strategy. If you don't buy US Treasuries, fine. At best, like now, the US hits you with tariffs, your currency appreciates, your goods can't be. At worst, your economy collapses. The last time we saw a major currency crash was when Russian troops entered Ukraine. At that time, the Russian ruble lost 30% of its value in just a week. Why? Because the US froze $300 billion in Russia's foreign reserves, effectively blocking their access to dollars. Russia immediately lost the ability to transact with the world in dollars. I have a friend who used to run a civil aviation business in Russia. He was the first billionaire I met when I was in university. But now the rubles in his hand can no longer be exchanged for dollars. On paper, the ruble has only lost half its value compared to the dollar. But in reality, on the official market, it's nearly impossible to get dollars. You have to go to the black market. And on the black market, the ruble has devalued 2 to 3 times compared to the dollar. That means his assets have evaporated 2 to 3 times over, and he can no longer convert them into dollars. His money is now only usable within Russia. Many people say times have changed, and if the U.S. continues doing this, the dollar will collapse. But let's look at the facts. Even Saudi Arabia, despite loudly advocating for de-dollarization, still accepts dollars when selling oil. China sells off long-term U.S. treasuries but simultaneously buys short-term U.S. bonds. Not to mention Japan, the UK, and Canada, because simply put, the value of a nation's currency is backed by gold and U.S. treasuries. If U.S. bonds collapse, then the assets your country holds will collapse as well. Can your currency still hold its ground? So when the U.S. financial system, the Federal Reserve, and even the U.S. government openly say that America is facing difficulties, yes, the dollar may lose value, but it won't collapse. On the contrary, this helps the U.S. reduce its debt burden and pushes down the price of American assets, giving capitalists holding large amounts of cash, like Warren Buffett, a chance to buy up U.S. assets at bargain prices. Most importantly, it forces the whole world to continue buying U.S. treasuries. Of course, you could choose not to buy them, but your economy might end up like Japan's 30 years ago, or worse, like Russia's now. So do you still think this is just a currency war between the U.S. and the rest of the world? When Japanese, Thai, or Russian people can only watch as their assets vanish, powerless to stop it, who's next? When even governments can't fully protect the wealth of their citizens, shouldn't we learn to protect ourselves? Don't expect the country to always take care of you. Many people are still brainwashed into thinking that simply holding long-term investments will eventually lead to recovery. I can only say, those people will only wake up when it's too late. I've seen too many of them. At this point, someone might say, I don't buy US bonds, I buy gold instead. That should help weaken my currency too. That's true. But you still have to use US dollars to buy gold, right? In other words, if a country uses its foreign exchange reserves, namely US dollars and treasuries, to buy gold, then their dollar and bond holdings will naturally decrease. Sounds obvious, right? You can see this clearly. Since we started reallocating our investments into gold last year, the price of gold has risen significantly. It's up 68%. That means today, a country must use 68% more US dollars than it did a year ago to buy the same amount of gold. Simply put, gold prices have skyrocketed. If your country wants to buy gold now, it has to spend a lot more dollars. On top of that, if you choose to buy gold instead of U.S. bonds, the U.S. might impose heavy taxes on you, making it even harder for you to earn dollars. At that point, your country may face a serious dollar shortage. And if American capitalists start shorting gold, dragging its price from peak to bottom, and your country, because it's short on dollars, can't afford to step in and support gold prices, so what happens next? Your country can only watch helplessly as the gold you bought at high prices keeps losing value. In other words, not only do you lose your dollars, but you also lose your gold. Simply put, your nation's assets have quietly been transferred to the U.S. You may say this is just my personal speculation, but I can only say history always repeats itself. After the 2008 financial crisis, the U.S. Federal Reserve kept printing money. While the global economy was still struggling, the U.S. economy not only recovered quickly, but even performed better than before. So it's not like the world hasn't tried de-dollarization. They kept buying gold. From 2008 to 2011, gold prices soared by 177%. At that point, American capitalists laughed and issued a directive. Goldman Sachs received the holy order and immediately released a report forecasting a sharp 30% drop in gold prices. Soon after, all of Wall Street followed suit with negative gold reports, intentionally creating a panic. That was step one in the short selling plan. Step two, Wall Street began massively dumping gold across global markets, quickly pushing prices down. The world looked on and said, Wall Street was right. Gold really is crashing. So the whole world began selling too, forming a downward trend. Within just 1 month, gold prices fell by 10%. For gold, a 10% drop is a severe crash. At that moment, even the Swiss central bank couldn't hold back and planned to sell off its gold reserves. But just then, step three of the short selling plan began. Wall Street struck again. In 2012, as soon as the gold futures market opened, a short sell order for 300 tons of gold was executed in just 1 minute. Keep in mind the entire world produces only around 2,700 tons of gold per year, and yet in just 1 minute, someone sold 300 tons. In reality, these Wall Street short sellers didn't even have 300 tons of gold. They just paid a margin and executed the short sell, driving gold prices even lower. That fire was fanned even more intensely. The goal was to get more people to sell gold, dragging the price further down. At that point, gold had already dropped 45% from its peak. Countries and investors around the world had no choice but to bite the bullet and sell their gold cheaply in exchange for U.S. dollars and rising U.S. bonds. American capitalists not only redirected their money from gold back into U.S. bonds, but also profited greatly from shorting gold during this dollar wave. This is the most crucial point. Simply put, the U.S. is now imposing tariffs on the entire world, causing global stock markets to crash and most world currencies to appreciate. So you're left with three choices. First, don't buy any assets, let your currency appreciate further, and risk ending up like Japan, losing 30 years of growth. Second, follow the advice and buy U.S. bonds. Third, buy gold, wait until the price is pushed high, and then slam down. Ultimately, you'll still end up buying U.S. bonds anyway. The key point is, whether you choose U.S. bonds or gold, the U.S. can always trigger a global financial crisis like in 2008. After that, the U.S. Federal Reserve will have a reason to expand its balance sheet and print unlimited money. This newly printed money will be lent to American capitalists at near zero interest rates, allowing them to scoop up U.S. assets at bottom prices and drive them back up again. At that point, the U.S. will be the first country in the world to recover after the crisis. Global capital will then flow into U.S. bonds or stocks as a safe haven. Global assets will continue to plunge. On top of that, with tariffs in place, the entire world will slide into recession. That's when American capitalists will cash out their U.S. assets at the peak then go on a global shopping spree for cheap, panic-sold assets. In the end, America will rise again from the ashes, while the rest of the world scrambles to buy U.S. bonds, U.S. dollars, and U.S. stocks. The world's undervalued, fire-sold assets will once again end up in the hands of American capitalists. So you may gamble that this time will be different, that the U.S. plan will fail. But all I can say is, even if people stop buying U.S. bonds or dollars, the entire world is still buying gold. As of now, there is no currency that can replace the U.S. dollar as a reserve asset. Whether it's U.S. bonds or gold, they both must be traded in dollars. And whether it's gold or bonds, the country holding the most of both is still the U.S. And no matter how hard the world tries to de-dollarize, when a financial crisis hits, only the U.S. Federal Reserve can expand its balance sheet and print money to inject into the market. If other nations, lacking sufficient foreign reserves, try to follow the U.S. by printing money, many people ask me, what can I do to avoid the upcoming crisis? Honestly, if even the world can't avoid this crisis, what can a small person like me do? This isn't something that traders or investors alone should care about. All I can do is share what I see, remind those who share the same mindset, and look out for my fellow brothers and sisters. It's precisely because I'm just a small individual that, when a crisis hits, I can take advantage of my smallness. I'm more flexible than the big players, more flexible than financial institutions, and even more so than entire countries when it comes to asset allocation. If they are elephants, we are mice. That's why I never hold long-term assets. For example, even though I know the US will first push gold prices up and then crush them, I can still buy gold. Why? Because when gold prices soar, I can buy in and make a profit. And when they crash, I can short sell and still make money. But what about the big players or governments? They operate with huge amounts of capital, so they have to buy early and sell early. In the end, they either miss the chance to buy or can't sell in time, or worse, they're unable to buy or sell at all. That's why I started allocating to gold and Bitcoin as early as last year. Now, while the whole world watches stocks and bonds plummet, those assets are surging. So what I need to do now is watch the market carefully to see if the US really does push gold prices down, and only then decide whether to hold or slowly exit. My job now is to decide how much to sell and how much profit to take, not to ask the same questions I hear from many others. Questions like, my capital is stuck in stocks. What should I do? Or, gold is already so high. Should I still buy it? See the difference? Why are our choices so different? Why are you so passive? It's because you're not leveraging your small advantage. You're trying to hold on long term, freezing your own money. Meanwhile, the market isn't just volatile. When a financial crisis hits, it's like a tsunami. At that point, you'll be passive, powerless, and then you'll come to me asking, what should I do now? Because by then, every decision you make will carry consequences you can't afford. And so you hope to shift that burden onto me. But it's not just because we understand the trend that we're able to respond flexibly. The most important reason is that we have a clear plan. When taking profits, we know how much is enough. When taking losses, we know our maximum risk tolerance. So if you don't want to miss out on the next market opportunity, what you need to do now is prepare in advance. Align your thinking with mine, understand my entire mindset and investment strategy, and then make it your own. Don't just pass the responsibility on to me. The situation ahead will only grow more chaotic. But since time is limited, this video will have to end here. I'm sharing free insights on how to become wealthy, become an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, I still recommend you subscribe to my channel, hit the notification bell, and share this video widely with others. And I want to bless all of you who like this video early. May you achieve financial freedom. If just one or two sentences I shared today can help make your life a little